And also boosting sentiment today, a round of upbeat economic data from jobless claims falling to a 5-year low to a manufacturing index hitting a 2-year high. But a report from the Census Bureau showed that construction spending declined 0.6% in June, surprising analysts who were in fact expecting a slight rise. Liling has a look at all the recent eco data and whether it means it's safe to say that the recovery is gaining momentum.
Here's the good news. In the last week of July, the number of Americans applying for unemployment benefits fell to their lowest levels in more than 5 years. U.S. manufacturing is at its strongest in 2 years on the back of rising production and hiring.
America may be improving faster than we think. And, I hate to say this, there's always a good and a bad.
Now here's the not so good news. Different sectors of the U.S. economy have been sending what appear to be conflicting signals, creating an underlying and persistent uncertainty. America's GDP has grown 1.7%. That beat expectations, but remains at historical lows, which raises a question. How steady is America's recovery really?
People are sort of associating the relatively low GDP numbers, 1.7% yesterday, with a very, very slow, ragged economy. But it may be not that. It may be that the employment numbers are telling much more the picture. And you also had another very, very good number today. You had manufacturing survey coming in at 55. That's a big number. That's a number that's very often consistent with 3 or 4% growth.
There are also mixed views on inflation. The U.S. Federal Reserve, while holding steady on its stimulus policy, flagged low inflation as a concern, even though the cost of just about everything Americans need, clothing, food, and housing, is up.
What is soaring and what is doing very well, oil's at $107, $108 a barrel. And that's getting to the point where it's inflationary.
Economist Stephen Leeds says Friday's jobs report will likely come in better than expected, but with gas now at about $4 a gallon in some parts of the U.S. and wages largely remaining stagnant, it's hard to make the case that things are getting better in America. Liling, CCTV, New York.
And for more on the U.S. economy, we are joined by John Herrmann, director at Herrmann Forecasting. John, nice to see you again.
Thank you, Michelle. It's great to be with you again.
So the GDP being revised upwards to 1.7%. Is the recovery gaining momentum? What's your read on this?
I think the economy is gaining momentum, certainly in the private sector where we look at business spending, consumer spending, and residential construction. Those figures all look very solid. Government's still in that deleveraging mode, and we'll be talking about that for another couple of quarters or so. But the good thing is the private sector is really looking much better.
Why?
Well, we saw a few things in the GDP report. One, we saw a substantial upward revision to household income, also to household savings. We saw a pretty decent consumer spending figure. And the other thing I thought was very impressive was business spending on capital goods continues to be resilient. And then we see this ongoing turnaround in housing construction. So these are the three key engines that we see in the private sector.
Well, one of the things that were highlighted in the report is that businesses, like you mentioned, are spending more. Is that to mean that they're expecting an even bigger growth in Q3?
I think what we can assume is we're still going to have this fiscal drag with us in the third quarter. So that'll still be slowing. But what we do expect to see is we think that the manufacturing report that you were talking about earlier, we think that's showing that motor vehicle sector is ramping output, so that's a plus. We see very resilient spending on business software and also on business high-tech equipment and capital goods. So all these things look pretty good.
Now, what was interesting is that for the first time, the GDP included components such as copyright research and development expenses. And economists say that that's going to add about 3% to the GDP going forward. Now, my question is does this have a real basis, or is this like clever accounting? Some good number manipulation.
I know on the surface it looks like we shifted from an expense accounting to now counting it as investment. But the fact is, when Apple and all these developers spend a ton of money research developing, whether it's the apps for the iPad and the iPhone, so it's the app economy, or Intel is spending tons of money to develop new chips and so on. all this, this is actual, what we call human capital. It's not the same thing as the physical capital, the robots that we use to build motor vehicles, but it's the human capital that we need to design
But at the end of the
phones
day, does this result in added tax revenue?
It results in improved output, and improved output translates to higher tax revenue. As Apple said, Apple is the largest payer of taxes in America.
Very quickly,
Yes.
jobs report coming out tomorrow. We had jobless claims at a 5-year low. What are your expectations for the official government report?
We are in the optimistic camp, as you know, from the beginning of the year. So we think the payroll number can actually come very close to 200,000 or above. So that's what we're looking at, and we think there's a chance the unemployment rate gets revised lower. So we just continue to see signs that there's decent hiring going on. And as you cited earlier, the jobless claims are very low. So businesses are holding on to workers. So not only are they adding to their workforce, but they're holding on to the existing workers. This is a very good thing.
But are they adding part-time or full-time?
Both. And I know this has been a stickling point with
Yes,
you, but the thing is, we are doing both. There is some tax reasons why businesses are preferring
tax reasons, Obamacare reasons.
that they're preferring to do the part-time hiring. But in general, we have a knowledge-based economy that the unemployment rate is extremely low. The wages are very high in the knowledge-based economy. We bring in workers, we bring in students from around the world to our universities. We hope to retain the very best ones and even the very good ones, and we hope they don't return, but we're retaining them, we're holding on to them, and we are definitely growing the workforce here.
Where do you see the unemployment by the end of the year?
Fortunately lower. So we're about 7.5, 7.6 currently. We think we can get down to about 7.3, 7.2 by the end of the year.
Okay.
And then by mid-part next year, about 6.7, 6.6, close to the Fed's objective.
Okay, and then we'll maybe see that tapering. Now, Congress takes its vacation tomorrow.
Yes.
Still a lot on its plate. What is the #1 issue that Congress needs to get resolved?
They have to deal with the debt ceiling debate. That's the immediate thing for the next 2 months. They just have to, and as you know, Congress and the president they don't work that well together because we have the two extremes of the parties, and they clash, for lack of a better word. They just clash. So, but what we'd really like to see is, we'd like to see a rationalization of the tax code. That would be tremendous. Even if they could do it for businesses, that would help give businesses confidence to, give some guidance as to where the future is going to be. Also help them bring some of the cash home. We keep $1 trillion overseas in overseas banks. It would help to encourage to bring some of that home. That would spur investment. It would get paid out in terms of dividends. It may even result in share buybacks. All these things that would just push stock prices higher. So we still are in that camp where we think stock prices are going higher to the end of the year and into next year.
Okay, we will be checking to see if
bull.
you're right. A bull. John Herrmann, thank you so much,
Thank you,
Director at Herrmann Forecasting.